In this video, we're going to talk about Carpenter Technology. We're going to be using technical analysis on daily and weekly time frames. We will also be looking at the relative strength indicator on a daily time frame, moving averages on the weekly and daily time frame. We'll be looking at the RSI on a daily time frame, a trend channel on a daily time frame. We'll be looking at the Chaikin MACD or the Chaikin money flow on a daily time frame and a MACD on a daily time frame. At the very end of the video, I'm going to add something new that I haven't done before. We're going to go through an earnings model and we're going to project out our earnings for the future and then bring them back to today to determine if Carpenter Technology, the company that we're going to talk about today, is undervalued or overvalued. So let's get right into it. Real quick disclaimer, this is not financial advice. This is information. I like to bring it to you so you can make an informed decision on whether or not you think you should put your money here. You can't buy everything. This is just something to bring you information, and then you can determine if it's worth putting your money to work in this company or not. So the company description for Carpenter Technology. Carpenter Technology Corporation engages in the manufacture, fabrication, and distribution of specialty metals in the United States, Europe, the Asia Pacific, Mexico, Canada, and internationally. It operates in two segments, specialty alloy operations and performance engineered products. The company offers specialty alloys, including titanium alloys, powder metals, stainless steels, alloy steels, and tool steels, as well as additives and metal powders and parts. It serves to aerospace, defense, medical, transportation, energy, industrial, and consumer markets. The company was founded in 1889 and is headquartered in Philadelphia, Pennsylvania. That's just a brief overview of Carpenter Technologies. So we can see on a one-year time frame that Carpenter Technology is well above VWAP and it's held VWAP for the whole year, and it's rising, and it's actually taking a stair-step pattern here. So you can see right here we have step one, and then we break out of step one. And then we come into step two, we break out of step two, now we're in step three, we break out of step three, now we're in step four. So now we're looking for our next break here to go to our next step, step five, or it could break down, but for lots of reasons, I don't think that's happening. I think step five is coming next, and I'm going to go through that and show you why. If we look at the 63 exponential moving average, we can see we've been holding that most of the year. Right now we're on it, and we actually kind of have a double bottom here where we're breaking back above it. So you see we come down just below it, and then just below it here, it's very hard to see, but two times here we come below it, and right here, if I was to draw a line, we break back up, and now there's a lot of upside. We're looking to break this level. Once we break this level here, which is about $195, $196, you'll have gotten rid of all the sellers. Because what happens with technical analysis, the way we want to use this is, we know this is the highest price over the last year. So people came in and bought here, and then the price got driven down to about $170, $169. So all the people who bought here that watch the price go down are now going to, when it comes back up, they're going to be happy to take their break-even price and get out. And once they get out, there'll be no sellers left. And when we break this level, that'll tell us there's no sellers left, and it'll go higher from there. We have big volume when it went from here to here, so that's an indicator that this is going to be turning up higher. And when we come back on lighter volume. But if we look here, it's kind of hard to see, but there's about 6 or 7 days, and only 2 of them are bearish, and it's very light volume on the bearish days, and that's actually probably around the holiday of New Year's. We have an RSI that is crossing the 50, so that's another bullish indicator that money is coming back into this stock. If we look at the daily candlestick pattern, right here we have a hammer, and that's a reversal, and we have reversed off of that, and now we're heading higher, and we broke this right here, this resistance level. So our next resistance level is, like I said, around the 195 level, and we're at 180. So there's at least $15 of upside if we continue going in this direction and we don't break down, or there's not a market crash or anything like that. You can see on a weekly time frame, on the 30-week moving average, we've held that most of the year once we crossed it, and we have not come even really close back to it. We are about 20% extended from it. We do have on a weekly time frame, the week ending 12/20, a big bearish volume bar here, but we're nowhere near the 30 weeks, so I'm not too concerned about that, but it is something to keep an eye on, right? So we got to check all our parameters for negative and positive, and then decide if we want to invest if there's more positive technical analysis parameters than there are negative ones. This would be a negative one, but we did hold our 30-week, which is positive, so they kind of offset each other. On a weekly time frame, so this is a weekly candlestick chart, you can see we're in a nice uptrend, and we have that step 1, step 2, step 3, step 4, and actually step 5 here if you look at it on a candlestick chart. And these right here, in my opinion, are all reversal candles. This is like a hammer, a small little doji. There's probably other names for them. And then, we have a bullish candle that takes both of those out for a reversal. So I think for those reasons, over the short term and the long term, I think that Carpenter Technology will be going higher. On a long-term 5-year chart, you can see we're looking at a weekly moving average right here. This is also the 30-week. We are in a bullish uptrend, and this is a clear turnaround. In fact, when we broke out here to the upside, we came down to about the midpoint of where we broke out, and now we're turning. So that indicates to me that we're making higher lows, and we're making, if you see here, we're making a high, we're making a higher high, we're making a low, we're making a higher low, we're making a high, we're making a higher low, we're making a high, we're making a higher low. So the next step up, if the pattern remains in sequence as it has, is to go higher. Now, if we look at the Chaikin money flow, the trend channel, and the MACD, we're going to see some bullish divergence. So we have a price action with the trend channel that's moving up and to the right. However, over the short term, it's trending down. But if you look here, the Chaikin money flow went from -10 on 12/18 to 23 on 12/20. Now, when this is below zero, that's a distribution. Institutions are getting out of the stock. When it's above zero, that's accumulation. They're accumulating the stock. So the more above zero, the more they're accumulating. But if we go back up here, we can see that from 12/4 down to 12/20, we had a downtrend, but then we had an uptrend on the Chaikin money flow. And even though our MACD is closed, now it's starting to converge, and the histogram is trending up, and it's about to cross right now below the zero line. So many things indicate to me that money is coming back into this stock, and there's a lot of upside. The last thing we'll look at here is an earnings model. We're going to project out our earnings over the next 10 years, bring them back to today to get a present value, and determine if the stock is undervalued or overvalued. Okay, so I'll just go through a few things here. We have the bond yield, which is 5.41% right now, and we're using a gram valuation formula. I learned this from another YouTube channel called Dividendology. He shows you how to make it. There's math involved in this that I don't want to do, so I would watch his channel if you want to learn how to do this. This earnings model right here, I learned from Michael J. Investing. He is another YouTube channel. Also, a lot of math involved that I just don't want to explain. So if you want to learn how to make those, I'm referencing those two channels. Go ahead and look those up. We have a VIX that's at 16.38. You can see I have the ticker symbol here. Our RSI is 53.21 with the SPY at 47.27, which gives us some relative strength, right? 1.3, we're outperforming, where our strength is about 13% better than the SPY. We have a 30-week high of 194, a 30-week low of 97. If we were to drop to the 30-week low, that'd be about a 46% downside. I don't think that's happening because of all the technical indicators I showed you. You can put stops in to protect yourself. You have to decide what kind of risk you want to take on. There's no guarantee that this is going to go up just because I'm talking about it and everything looks good. Anything can happen in the market. Now, when we project out our earnings over the next 10 years, I'm taking the forward 2025 earnings of $8.15. Those are being annualized. I'm using a growth rate that I'm taking from Finviz, annualized at 31%. So I'm not trying to predict this myself. I'm using their growth rate. And then for the final 5 years, I am taking that growth rate and cutting it in half. So that brings back a present value of $353.54. I'm using a discount rate of 15 with a terminal multiple of 15. And that gives me a price target for 2036 of $984.61 if this grows over the next 10 years at that annualized rate. So you're 31% for 5 years, and then that growth rate drops and cuts right in half. Would be $353.50, and you bring that back to today, it would be $353.54 with a current price of $180.13 with a differential of $173.41 with upside to get to fair value of almost 100%, not quite. If you use the Graham model, it's a little less. It's worth 215, but it's still undervalued. So I think this stock, because of the technical analysis, the valuation is a $225 stock today, right now at least. And so to me, there's upside of what, $45 on a $180 stock. So about, there's maybe a little over 25% upside to the price that I'm projecting for this stock that I think it's worth right now. Full disclosure, I have a position in this. I actually have a double position because I try to position size around 10%, but I have about, I think, 17.5%. It's not quite a double position because I'm bullish and believe in this. So but I also have stops and I'm disciplined. So you don't know when I may or may not get out of this. So just keep that in mind. You have to do your own homework and you have to do your own due diligence. I'm just trying to bring you some information so you can decide if it's worth an investment or a trade for you, however you want to look at it. You can see this is just a 30-week chart right here, sparkline chart, and we have bullish momentum to the upside. And as long as we're going up to the right, we should continue going up to the right until institutions decide that they don't want to buy it anymore or the market itself corrects. But remember, a correction in the market doesn't necessarily mean a correction in all stocks, because some stocks will hold up. When you have a correction in the market, you often see the top 10, 15 stocks in the indexes. Those fold first, and you'll see stronger stocks that have good fundamentals, that are maybe smaller, not as talked about as much, like this one here, Carpenter Technology, hold up against that market correction. That's all I got. I hope that was helpful. If it was, consider hitting the like and subscribe button, and thanks for watching.